6 months. 6 straight months of Bitcoin losing ground. The last time that happened, it was 2018, and Bitcoin was about to crash another 70% before it ever recovered. Right now, we are sitting on the edge of that exact same streak. And the models, the on-chain data, the realized price bands, the historical patterns, they are all pointing to a number that is going to make a lot of people deeply uncomfortable. We are talking $40,000, possibly lower. And if you hold Bitcoin, you need to understand what is happening and why right now. Here is the situation. Bitcoin just had one of its worst months in years. The Iran war is hammering global markets. The Fed is stuck. And the data is telling a story that most people do not want to hear. But this is not a doom video. This is a clarity video. Because the people who understood what was happening in late 2018, the ones who held, or better yet, kept buying, those are the people who changed their financial lives by 2021. Today, we are going to break down exactly what the data is showing, what is driving it, and what it means for you as a Bitcoin holder. Let's start with the streak. Bitcoin is on the verge of closing 6 consecutive months in the red. That is not a stat you should ignore. The last time Bitcoin did that was 2018. That bear market was brutal. Bitcoin dropped from around $19,000 to $3,200, a wipeout by almost any measure. Now, we are not saying history repeats exactly, but the pattern is real, and it matters. Here is where we stand. Bitcoin is currently trading around 67,750. That sounds okay on the surface, but context is everything. Bitcoin hit an all-time high of $126,000. We are now 46% below that peak. That is not a dip. That is a bear market, period. The key price levels right now are simple. $70,000 has flipped from support to resistance. Bulls tried to reclaim it. They failed. $65,000 is the main demand zone the market keeps testing. Below that, and this is where it gets serious, the next real floor that analysts are watching is in the $40,000 to $50,000 range. Why those numbers? Let me explain 2 models that the pros are using right now. The first is something called short-term holder realized price. This is the average price that people who bought Bitcoin in the last 5 months actually paid. When Bitcoin was near its all-time high, that number was around $113,500. Now it has dropped all the way down to $83,200. That tells you a huge chunk of recent buyers are sitting at significant losses. Historically, bear markets tend to bottom when this metric gets squeezed down into the $46,000 range. That is one data point pointing to a deeper correction ahead. The second is the bear flag pattern. This is a technical formation basically, a brief recovery inside a broader downtrend that then breaks down sharply. Bitcoin has now printed this pattern twice in 2026.
Today's sponsor is BYBIT. BYBIT is your one-stop shop for crypto trading, crypto investing, buying, learning. I've also built a step-by-step digital course which teaches you everything you need to know about buying crypto on BYBIT, and not just buying crypto on BYBIT, but trading strategies, setting up crypto trading bots. Bitcoin is the best way to fight against tyranny, to fight against government corruption, to fight back against the Federal Reserve printing trillions of dollars and depreciating everything that your family has worked for your entire life. So get yourself some Bitcoin. You should at least allocate a small percentage of it to your portfolio. Be a smart investor. Don't let the government take everything from you. Again, my name is Ryan Mehta. Links to my affiliate codes are down in the description. Show this channel some love and go buy yourself some Bitcoin.
The first breakdown already happened. Analysts who track this pattern are putting a price target between $39,000 and $41,000 as the potential cycle low. Not guaranteed, but the pattern is clean and it has been consistent. Now here is the macro piece, because this is not happening in a vacuum. The US-Iran war is the single biggest driver of market pain right now. It is disrupting oil tanker traffic through the Strait of Hormuz. That is one of the most critical choke points in global shipping. When that slows down, energy prices spike. And when energy prices spike, inflation spikes. And when inflation spikes, the Federal Reserve cannot cut rates. That matters enormously for Bitcoin. Rate cuts are what typically send money flowing back into risk assets. Right now, the odds of the Fed cutting rates in 2026 have dropped dramatically. Meanwhile, recession odds are at their highest level since last September, and the 30-year Treasury yield is threatening to break to the upside would tighten financial conditions even further. The S&P 500 just closed 5 consecutive weeks in the red, the longest such streak since the Russia-Ukraine war in 2022. Bitcoin is tracking risk assets right now, and risk assets are getting hit from every direction. Here's another number that should catch your attention. Spot Bitcoin ETFs, the institutional products that brought billions into Bitcoin last year, just saw $296 million in weekly outflows. That broke a 4-week streak of inflows. When institutional money is pulling back, not adding, it tells you that the so-called smart money is reducing exposure until the picture gets clearer. On top of that, whale wallets, the addresses holding large amounts of Bitcoin, have started reducing their positions. That is another midterm headwind. And the fear and greed index is sitting in extreme fear territory. The order books have more short positions than long positions. The market is bearish and the data backs it up. What does a reversal look like from here? Analysts are saying you would need to see Bitcoin reclaim $71,000 convincingly, not just touch it, but close above it on the daily and hold. Until that happens, every bounce is suspect. The path of least resistance, as multiple analysts have described it today, is still downward. Now here is where I want to zoom way out. Because if you are a Bitcoin holder watching these numbers, you need to hold two things in your head at the same time. First, yes, this bear market is painful and it may have further to go. That is real. Second, the fundamentals of Bitcoin are not just intact, they are stronger than they have ever been. Let's look at what happened during 2025, the year Bitcoin's price was falling. Institutions bought 829,000 Bitcoin, not sold, bought. 23 nation-states now hold Bitcoin on their balance sheets. Lightning Network payments jumped 300%. The global infrastructure around Bitcoin is being built faster than ever, even as the price drops. And here is what is happening right now, in the middle of this bear market. Morgan Stanley, one of the largest financial institutions in the world, is about to launch a Bitcoin ETF with a 0.14% fee, the lowest in the market. They have 16,000 financial advisors ready to recommend it to clients the moment it launches. That is not a company that thinks Bitcoin is going to zero. Meanwhile, in Washington, there is a quiet but important battle happening. Pierre Rochard, the CEO of Bitcoin Bond Company, is calling out U.S. regulators for trying to slip new bank capital rules for Bitcoin into a Basel III rewrite without proper transparency. This is regulatory infrastructure being fought over in real time. The outcome matters for how banks can hold and lend against Bitcoin. It is a detail most people miss, but it is shaping the next institutional cycle. Here is the 2018 lesson that stands out above everything else. The people who panicked and sold in December 2018 when Bitcoin hit $3,200, they locked in their losses. The people who held or who understood what was happening and bought more, they watched Bitcoin go from $3,200 to $69,000 by late 2021. A 20x move. The bear market was not the end of the story. It was the setup. Bitcoin has a fixed supply of 21 million coins. That never changes. The demand from institutions, nation-states, and ordinary savers is only going in one direction over the long term. Bear markets are the market's way of transferring Bitcoin from weak hands to strong ones. The question is which side of that transfer you want to be on. If this kind of analysis is useful to you, the kind that gives you real numbers, real context, and a long-term framework, hit subscribe right now. We do this every day. And head over to bitcoinmaxing.com. That is where you can find a free Bitcoin retirement calculator that shows you exactly what your stack could be worth at different price points, plus daily Bitcoin resources to keep you informed and grounded. The link is in the description. See you in the next one.